Hello everyone, welcome to this next edition of Market Ruburu. Today I have a guest all the way from Bangalore, and in fact he has been a user of TradePoint as well as Noiseless charts for almost 4 or 5 years as well. And there is a double top buy in his name itself. His name is DT Bhatt, and the first time I came across his name, I thought yes, there is a DTB in his name itself. So that's why maybe he is very comfortable with Noiseless charts. And apart from, of course, doing other strategies, he has also specialized in doing option strategies. And one of them is a Batman strategy, which is quite popular. In fact, his Batman strategy is quite popular on Twitter, where he keeps posting his trades and how he adjusts them and how he manages the position. And let's hear more from him, from the man himself, because he is the person who has he has been using this strategy for more than a year now. Though he has been in the market for almost 20 years, he has been using this strategy for more than a year, and he trades it almost every expiry, I believe. So let's hear more from him. Welcome, Mr. Bhatt, and over to you.
Yeah. Hello, AP.
Yeah, hello.
This strategy is actually delta neutral strategy done in options, Bank Nifty specifically, but it can be done in Nifty also. But I have been doing it in Bank Nifty from approximately February 2021, 22. Sorry. There are actually 6 legs in this strategy. 3 on the call side and 3 on the put side. How we do it is we select 35, 20, and 5 delta strikes on the CE side and create the CE legs first. I will show it in later in the simulator or OPSTRA. So first, let us understand what are the strikes and how we do that. So first we go long.
Just 1 minute. Is there any specific? You said 1 day prior to expiry day, so that is Wednesday, right?
Yeah, normally, yeah.
For all weekly expiries or only for monthly?
For all weekly expiries, I do this on Wednesdays around 2:30. I initiate it. But there are some variations which I will cover it at the end. We can try it in weekly expiry, longer week also. I mean, on Friday you can create it for the next weekly expiry and then do adjustments. But many times we need more adjustments if you do it early. So this is basically looking at the theta decay. So we do it on Wednesday and then Thursday we close it.
So basically it is a strategy which lasts only for about 24 hours.
Yes. Okay. And many times in the morning itself, after the market opens, you may have to do adjustments or book profit. If it is
depending on how the market opens.
Yeah. Correct.
Okay, so carry on with your.
So this there are 3 legs on the call side, 1 long, 4 short, and 3 long again. So I select 35, 20, and 5 delta strikes for this strategy on the CE side, and similarly on the put side, we will have 1 long, 4 short, and 3 long again.
And this ATM is on the Bank Nifty spot, right?
Yes, not spot actually. I see from the OPSTRA whatever may be the ATM. I will just take the same distance from the ATM.
Okay.
Yeah. So I will just show the simulator and see on 8th February I have done one such strategy which gave good profit.
So is there any setup which you look for when to actually initiate the strategy in terms of time? I mean, earlier you said afternoon, now you said 10:40.
Not necessarily, AP, actually. What I do is if the market is trending a lot, I will not take this because this is a delta neutral strategy. So that is why I wait for the market to stabilize and then take this strategy.
Okay.
Yeah. So we have, I will take you to the OPSTRA and do one simulate.
Yeah.
Yeah. This is on 25th expiry, 25th January expiry. We take it as 16th start date. 1 second. Bank Nifty 16th February start date. We have to make start date as 9th February is the expiry date first.
Yeah.
Correct. So 8th is the start date, that is Wednesday.
Right.
And 9th February is the expiry date.
Right. So basically, you are simulating the strategy from 8th February to 9th February for the expiry on 9th February.
Yes, yes. So first what we do is, this is at 9:20. I normally do it at around 2:30. Okay,
Yeah.
so we will go back and then, yeah, around 2:30 we will see the option chain, and 35 delta we will buy one leg. 35 delta. See, there is no 35 delta. 139 delta is there, 31 delta is there. So we will take 31 delta as the one leg buy.
Okay.
Then we will short 20 delta 4 lots. So 20 delta is the nearest is 18 delta. We will take 18 delta. Short 4 lots. Yeah. Then 5 delta we will buy as a hedge.
Yeah.
So 42 400. 3 lots.
Okay.
So we will have a balanced, properly hedged position now. 41 800 long, 42,000 short, and 42 400 long.
Yeah.
Okay, so we have a minimum profit of around 1700 in this strategy.
Yes.
So now I will create the put side.
So this is essentially a bearish leg which you have created first.
Yes, correct, correct. Now we will create the put leg also.
Right.
So we have 41 800 at 35 delta. So we will first see 35 delta on the put side. So 36 delta is there, we can take that. So buy one lot. And 20 delta approximately. Now I can see the distance. Actually, the call buy call was 41 800, sell was 42,000. So we have 200, rather 2 strikes gap. So we will take 2 strikes gap here. So we have shorted 41,400 put. Sorry, we have gone long on 41,400. So 41,200 we will short. 41,200. 41,200. So it is approximately 20 delta, 23 delta it shows. So we will sell for quantity. Then what is the distance we have? So short to long, final long is 400 points. So here also we will take 400 points away. So 40,800. 40,800. By 3.
134, yeah.
Yeah, 143. One short, one long, 4. See, this is the Batman now. So if you look at the Greeks now,
so the payoff graph looks like a Batman.
Yeah, payoff graph looks like a Batman, and if you look at the Greeks, it's approximately near 0. So it's a delta neutral strategy.
Right.
Delta is almost 0. Okay. Right. Next we will go ahead and see what happens.
Just one question: what is the capital required for all these 6 legs put together? Because
it is
on the simulator you won't be able
approximately
to see.
2.5 lakhs. I will show
So
one. I will create one Batman for the next week and see.
yeah,
Let us
okay.
see how it works. That I will do it later slightly. I will just
Yeah.
finish this simulator. So we will go ahead with 15 minutes and see what happened on that day. So approximately at 3:20, it was in profit of around 400 points, 400 rupees. 15 minutes. So 9:20, next day, we opened exactly in the bridge. The
Okay.
bridge means two inside buy legs. So we have opened exactly in the bridge, and so we will have a maximum profit now, 2,300 rupees, which is approximately 1% of the capital deployed.
Yeah.
So here, what I do is if the market is not trending, we can convert this into a strangle by closing all the buy legs, or keep only some far off hedges for margin benefit. By inside buy legs, we will close and see what happens. Inside buy leg is 41,800, 48.6. And put buy leg is having 93.3. This also we will close.
Yeah. So now you are left with 4 legs instead of 6.
Yeah, 4 and 4 legs are left, and 4 short and 3 longs we have in both the sides.
Yeah.
So it is almost a strangle, plus with the far off OTM as hedges. So here you can see the maximum profit is now 7,300. We can go up to 7,300 if we close around the same levels. So we will go ahead and see. I will take 30 minutes and see.
Yeah.
See, the market has fallen.
Yeah, you can see the profit on the right hand side. That is a better way.
Correct.
Yeah.
See, now the profit is 2,400.
Yeah.
Yeah, like this, we can do the adjustments in strangle also now, because now the short leg has put side is 42 rupees and call side is 7 rupees. So we can do the adjustments in.
So bring them closer.
Yeah, bring it closer. The call side, we can bring it closer and do it. So I will not do those adjustments now. I will go ahead and see other adjustments. See. Here, if you leave it as it is, perhaps we may end in loss. Yeah, it is now increasing. Profit is increasing. And the market is expiring around the same levels, maybe.
Yeah.
It is 1150, and we are in around 3,500 rupees profit. Yeah, it is around 1 o'clock. Now we can take a decision to book the profit fully and exit, because gamma effect will be there and we have to manage it very closely. So this is one of the simulations I can show you.
So this is still about 4,000 on 2.5 lakhs. So this is still about 1.5% on the traded.
Yeah, see, if you continue it like this, we can actually see. See, at around 4 o'clock, it is 6,600. So approximately more than 2 to 2.5% now already. Yeah, this is exactly where it closed to 7,000. Maximum profit we will get here.
Yeah, but this is something you can't predict, right? So you have to take a decision.
Correct. Otherwise, if you are very adept in adjustments, you can continue it and do the adjustments. Yeah. So next we will go back to the PPT and see.
Yeah.
Yeah. The BNO, Bank Nifty opened in the bridge and we had maximum profit.
Yeah.
So what we convert to a strangle by exiting the buy legs, that is what we did. Depending on market moves, strangle can be adjusted. So we have, I can show you one failed trade where it did not open. It opened well, but yeah.
That is also important, showing a failed trade.
Yeah. So 24th January trade was a failed trade. It is actually not a failed trade in real sense. It opened in the bridge, but it fell very fast on 25th, if you remember, AP. 25th,
Oh, yeah.
the market fell way big time.
Yeah.
So we will go to that simulator and see. So we had 24th as start date, January 24th. 25th January was the expiry day.
Yeah.
It was a Wednesday actually, because 26th was holiday.
Yeah, I know.
25th January. Yeah. 25th January expiry, 24th we will go to 2:30 and initiate the. So now we can start simulating this. So we will take 15 minutes ahead and see.
Yeah.
See, at 320 we are in slight profit around 500 rupees, and we will go to next day. See, the market opened in the bridge perfectly. So here we can take to convert it to strangle, but again the view should be very important. How was the market on that day and how the movement of the index is happening? So we will go ahead and see what happened. Was there a FOMC or something? Why market was very volatile that day? So it started falling, and we are still in profit, but yeah, now it started giving problem. So if you have not adjusted anything,
in the
we
first
are
45 minutes, it went from profit to loss.
Yeah, see 3,000 rupees loss. This is the time to cut it or do adjustments. We can do adjustments. I will mention it at the end of the session how we can have done. See, now we are in a big loss. If you continue like this, we will be losing heavily in this trade. We are 12,000 loss now.
Yeah, it can be as high as 22,000, right?
Correct. 19,000 loss now, actually. So if you leave it as it is, it will be like this.
So in the first 2.5 hours, from a profit of 1.8 1800, it went to a loss of 12,000. Sorry.
Correct. 19K now. 19K loss now. Okay. So we will go back to the PPT and see what else is there. Okay. So there are some variations. This is in essence, AP, how we do this Batman. I can show in the OPSTRA how we can create for a future week and show it later. And margin and other things we can see.
No, my only question is this 25th January case. What was the actual adjustment done to save your loss? What you could have done?
Yeah. See, what we have to do is we have to exit the profit making leg. That is call. Call side, you have almost zero loss possibility now, or you are in full profit on the call side. Right. So we will book it fully, and on the put side, first we will convert it to a butterfly. So it is slightly more manageable. Butterfly means what we will do, we will buy the inside leg one more lot, one more put, and outside put we will bring inside, because it is a far OTM that we have to bring inside and then manage it as a butterfly.
Okay.
If it is falling, market is falling, then we will have to convert it to a debit spread.
Right.
So you will have to cut the two short legs of put, and then we will have 2 plus 2, which we have to carry and do the adjustments as if it is a debit spread.
So, in a nutshell, if the market goes against you like it did on 25th January, you will have to spend a lot of time only fighting this position.
Yes.
You can't do anything else.
Yeah, correct. Yesterday was the best example. This week's expiry, I had a position on Tuesday. As a variation, I did it on Tuesday, and I had to manage yesterday very well to come out of the problems.
Okay.
Because market moved trended very nicely yesterday. Today also it was trending. Yeah. So some of the variations which we can do is if you are confident that the market is in sideways, we can create the short legs first, KP. That is strangle with the 20 delta strikes, whatever we have done, no 4 lots each. That you can do in the morning, and by evening convert them to proper Batman. Buy the inside buy legs at 35 delta, 1 lot, then add OTM hedges at 5 delta, 3 lots each. So idea is to pocket some intraday theta decay, because that strangle decay will be gainful to us.
So this is basically entering the legs at different times.
Yes, correct. For that, the view is important. You should have a sideways view of the market. Otherwise, your strangle will not be helpful to us.
Right.
Convert to a strangle. This I had shown in the simulation. Convert to a strangle and then manage it. Even iron condor with the far OTM hedges. Either way you can do. If you have good margin availability, you can just convert it to a strangle. Exit both the buy legs, all the 4 buy legs, and then manage as a pure strangle. Then, like any other strangle, you can do the adjustments. Then
and any reason why you prefer to do it on Bank Nifty and not Nifty?
Bank Nifty is easier to do because the strikes are more strikes will be available for adjustments. In Nifty, you don't get more than 2 strikes. In Bank Nifty, if you do it on Monday or Tuesday or Wednesday morning, if you do, you get 300 or 400 away strikes. I mean, 3 or 4 strikes away for shorts. So that we can actually do more adjustments, easier to do adjustments, handle the adjustments.
Yeah, so basically success of this strategy depends on how less volatile is Bank Nifty, right? If it becomes volatile, I mean one-sided trending, then there is a problem.
Yeah, then there is a problem. So ideally Nifty should also be, we should be able to do it in Nifty also. But so one more adjustments what we can do is if it opens at or near the short strikes, that is at the strangle strikes, if it opens, exit the winning legs. That is if the market is falling, exit the C side. If the market is going up, exit the put wing fully. Then convert the losing leg to a butterfly or a broken wing fly basing on the view. So if the market starts range bound after falling or after going up, we can convert it to a butterfly. And if it's still trending, we can do a broken wing fly. Okay. If opens beyond the break even, then exit with loss, like the example of 25th. If it had opened well within the bridge, but if it starts going down without doing any adjustments, better to exit as soon as you hit some percentage of loss.
So basically exit the strategy completely.
Yes, exit the strategy completely.
Okay.
And release the margin.
Yeah. Based on your experience, let's say out of 4 expiries or maybe let's say 52 expiries, how many, I know this is not something which can be standardized, but I'm sure a lot of people will have this question. Let's say out of 52 expiries, how many have been smooth and how many needed firefighting?
Approximately 20% may need firefighting.
Okay.
And actually, the win ratio of this strategy is around 86%. We have done some backtesting, AP.
Okay.
Around 5 years data, we have done a backtesting. A friend of mine has done through Python programming. But the main problem of the strategy is drawdown. If you keep without doing any adjustments and close the strategy at 3 or 2:30 or 3 o'clock, the drawdown is very high in case of a failure. Like,
Yeah,
for example, 25th, yeah.
I can see that, I mean, 1 week's loss can take away maybe 4 weeks of profit.
Yes. But for the last 1 year, I have observed, and during our backtesting also, we have seen some 2 or 3 times where the market opened gap down or gap up more than 1,000 points. Very rarely it happens. So if it opens beyond the short legs or beyond your break-even points, then only the major problem comes. Otherwise, you can firefight.
Okay.
See, for example, 25th, we could have done the adjustments and converted it to a ratio spread or a butterfly or a debit spread and come out without any loss.
Yeah,
But
it
if
gave
you
enough
left
time
it,
on previous.
yes, we have time to adjust it because still 6 hours of trading is left when the market opens.
Yeah.
Yeah. AP, shall I show one in OPSTRA for the current month, current week
Maybe
or something?
we can end with one live strategy just to see how it looks the next week.
Yes.
2nd March.
Yeah, it will look like this.
Okay. So what is the total capital margin required?
Total capital is 2.18.
And then this is the capital required for trading this strategy. So you need what, at least another 1.5 to 2 lakhs for any adjustments, right?
Yes. Around 4.5 lakhs is enough for
one lot.
Yeah, one lot. 143. 143.
Yeah.
See, the maximum profit is 15K, which is approximately 7%. And minimum profit is 5,465. If you are in the bridge.
What you can do is, just for the sake of tracking it, you can save this strategy and we'll see how it performs.
Yeah, correct.
Next.
Correct. Yes. So that is around 20 delta. Normally, we have seen strangle with the 20 delta, the success rate is quite high. So here, if you see, the probability of profit is around 66% in this strategy, which is quite good to start with. Yeah. And minimum profit is around.
The risk reward for these strategies to start with doesn't look good, but as days progress, I mean,
we can manage
hours progress, they can manage.
Correct. And the minimum profit in this case is around 2%, 1/3 of 7, around 2.5%, 5,465 for a 2.18 lakhs capital.
Yeah.
This is quite good for a weekly strategy.
Yeah, right.
So if we are able to manage it and increase the profit, we can actually aim for 6 to 8% monthly profit in this.
So basically 1.5 to 2% every
Correct. But we need adjustments to manage the huge gaps or huge movements.
Okay.
Yeah, that is it, AP.
So this is a very interesting Batman strategy which he trades. He has been trading it for last 1 year, which is almost 52 expiries, and of course there is a lot of many times, like he said, 20% of the times some adjustments are required. Otherwise, he has seen a smooth progression of the trades, and it is mostly a 24-hour strategy. So you have to be alert as an expiry trader on that Wednesday afternoon to Thursday. And he has a good success rate. But of course, for those bad days, bad weeks, you must know what is the adjustments to be done. Otherwise, like what we discussed, 1 week's loss can take away maybe 4 or 5 weeks of profit. So like any option selling strategy, You have to be alert. You should be aware of what are the adjustments to be done. Don't try it if you're not aware of that. Observe it for a few weeks and then only jump into it. We hope you liked it. Do subscribe to our channel, share this video and like it. Thank you.